Here. All right, this is
Okay.
Miss Erin with FEMA.
Hello. Well, I'm not with FEMA. I'm a contractor for FEMA, but I'm a flood insurance regional liaison. And I support the FEMA region in 6 states. And we've also got Diana Herrera, who is our FEMA regional flood insurance liaison for all of the states as well. So we sort of I support her in getting the message out in the springtime. So thank you, Samantha, for putting these meetings on and getting the word out to your community. We really appreciate it. My phone number is there and my email. I will put Diana's in the chat. I meant to add it in here and I didn't. We made a few other changes today as Diana and I were going over this. And I forgot to add that one in. So let's go to the next slide and just talk a little bit. And I noticed that Tracy covered a few things that I've got on my presentation, so I might jump over some slides here. But we're going to talk a little bit about the NFIP. Then we're going to talk about this rating methodology that the NFIP switched to a couple years ago and it's been fully implemented now. And some new things that got added within the last year that I think are kind of exciting. You know, maybe doesn't apply to everyone in your community or maybe your community at all, but it's just a good thing to know about. And then understanding the flood risk and talking a little bit about emergency preparedness. I have a few slides there, and then we'll go into resources. And then I'll talk a little bit before we get into the Q&A about what's coming in the future. And it's really just a tease because I can't talk a whole lot about it yet, because they don't have prepared presentations for us, but I'll show you what's out there so you can read up on it, because it's kind of cool what's coming. I'm hoping that it comes in 2025, but we'll see if that's what happens. So, okay, let's go to the next slide. So, you know, what is the National Flood Insurance Program? I like to talk about it. It was really a voluntary program that the federal program, the feds developed to enable property owners in the participating communities, which Miles City is a participating community, to purchase flood insurance against potential flood losses in exchange for adopting and enforcing the regulations that reduce future flood damages. And it's really important to understand that the overall implementation of this program has saved countless lives and loss of property over the years. I like to talk about here in Colorado, where I'm based, the city of Fort Collins, back in the 70s, lost over 300 people in a flood event. And then in the 80s, they had another big event and they lost about 83 people. Well, we had a catastrophic event that happened in 2012, I believe, that covered a big part of our state. Went, you know, was Boulder, Fort Collins, went way east of there, went north of there. We got 36 inches of rain in 3 days in certain parts of our state, and we lost 3 lives. So understanding this flood risk, and honestly, we didn't have a single claim. We might have had 3 claims in the city of Fort Collins because they're a participant in the CRS community, like Miles City is, and they're our highest rated. So they work really hard to make sure that they go the extra mile to get a higher discount. So they got our highest discount in our region because of the work that they did. And it paid off in that last event. It really showed. And that's important. So that's why we do it. And I think a lot of people you know, really don't understand why we do it or don't think about it. You know, they're just frustrated that they've got to buy flood insurance if they're in a high risk flood zone. So I'd like to kind of bring it back to a real time story that's happened in our lifetimes and seen the benefit of it. But what's really kind of cool is that, you know, there's all these pieces, right? There's the federal regulations, there's the state regulations, there's the local flood regulations, and then enforcing. Those are you know, key pieces to you know, the stool that we're looking at here. And then the last piece, or the 2 other pieces on the left side here, are incentives. So we give grants to help communities build back stronger after a flood event, before an event. And then the last piece is that personal responsibility as a homeowner for that house that is, and I'm sorry, my connection is unstable. I keep getting this message. So did I come back in, you guys? I know I dropped completely out earlier and had to, it auto loaded me back in, but can you guys hear me?
Yes.
Okay. So then insurance is that last, keep your personal property resilient, your community resilient, you know, community that has a higher amount of policy count and has a flood event is much more likely to come back more quickly and than a community that has a low policy count. And so that's what we're always looking for. And Samantha's done a great job over the years of getting people to understand that risk. So let's go to the next slide here. And I know, Tracy, you talked a little bit about this, but and we've got a map later that kind of shows some of this. But these are our special flood hazard areas. I kind of always giggle, but you have to make it sound nice, right? These are the high risk, the special flood hazard areas are our higher risk flood zones. There's no V zones in Montana, but those are like the coastal zones that have wave action. But any sort of A zone is considered high risk. And it, you know, we don't really like to say 100-year floodplain, but it's more a 1% chance. And I like to use an example of Houston. They had two 100-year flood events within back to back. So it doesn't mean we're going to have it once every 100 years. It just means statistically over a very long period of time, that's where it falls out. So you can definitely have those events, you know. And then we have our non-special flood hazard areas. Those are our low to moderate risk flood zones. And BC or X are generally mapped. The D zones have yet to be mapped or have the risk assessed in that D zone. And so and I haven't confirmed this, but D zones are rated like A zones with the new rating tool. I haven't confirmed exactly how D zones, you know, if they're still getting rated exactly like A zones. And then there's individuals in these zones receive 1/3 of federal disaster assistance for flooding. So it's just, you know, it's really important. A lot of people say, oh, well, FEMA will come in. Well, we'll talk a little bit more about why that's a challenge. So, but let's talk about the maps. If you haven't looked at the maps, Samantha's a great tool locally if you're not comfortable looking this up on your own. But this is the website that you can go to. You can just Google FEMA Map Service Center, and this will pop right up. And you put your address in that little address book right here. And then you click search, and then the map will pop up. You can also, if you have questions about the Map Service Center, there is a great toll-free number I like to point out, 877 FEMA MAP, and they can help you with any questions. I know that I probably call in about once a month to these folks when I'm having trouble maybe finding an older map or a question about somebody's letter of map amendment submittal. So let's just look at this map. So this is what a map looks like. This is Minnesota, city of Moorhead. And as you can see, we've got all the flood zones here represented. That striped area, that's the floodway. That's an area that the floodwaters need to be able to expand and contract in a flood event. And then we've got that blue area here and along this line here. That's our high risk A zone. Floodway is also high risk. There can be limitations in these flood zones. It depends on the local regulations, but for rating purposes, these are the same. So I like to point that out. And then you can see here, we have this weird little donut. Where did my arrow go? I've been having this problem. I got a new laptop a couple months ago and it keeps, there it goes. It disappeared on me again. Okay, so right here, it's in the middle. This is considered a non-SFHA, low risk flood zone. But you can see it's surrounded. It's got high risk flood zones kind of all the way around it. And then this golden area, that's our 2% chance of flooding, our X zones. Again, there's no flood insurance requirement in these flood zones, but your risk is higher than for these folks that are here. But you can still see all of them are surrounded, like it's everywhere. So this is kind of an interesting map because it's a good map because it shows all the different flood zones in one without me having to take you out to the internet and look at an exact map and zoom in and zoom out. So if you have questions about, if anybody's on the call who is not within Miles City and has questions of whether their community is participating in the National Flood Insurance Program, you can go down to the community status book and look up the name of your town, and it'll tell you whether you're participating or not participating. The list isn't always complete. If a community is never joined and you don't find your city name on there, it probably means they're non-participating. But it's always good to double check. Let's go on to the next slide here. Let's talk a little bit about the policy, what it covers, what it doesn't. We've got 3 policy forms for different types of structures. So the dwelling form covers, primarily homes, 1 to 4 family homes. It can also cover contents within a condo property. I don't know, Samantha, do you have many condos in your town?
Not really, but we do.
Yeah. So we won't dwell on the RCBAP. That's a residential condo building association for a community that buys a policy for all the residents within that community. And then the general property form is for sort of a catch-all policy for everything that isn't a dwelling form. So it could be a nursing home, it could be a church, it could be a co-op, which those are more popular in New York, but believe it or not, we have some co-ops here in Colorado. In the Denver area, not too many, but we have them. And then I'm trying to think of what else, rural structures. So farming buildings might fall under this general property form. Silos would fall under this property form, for example. Barns, storage units, could be a hay barn, depending on how that structure is built. So it covers a lot of different things. Apartment buildings. So it can fall into, so these are our different policy forms. You can see the different policy limits. So the maximum amount of coverage that you can get for a home or a condo or a townhome is $250,000 for the building, and then $100,000 for contents. And then we have that $30,000 increased cost of compliance. And that is what Tracy talked about a little bit about bringing a home into compliance. Within the policy, there's $30,000 built into the policy to help bring the home into compliance. That could be elevating, that could be moving the structure. You could use it for buying land. Say you want to just move the existing house onto a new piece of land. That money could go towards purchasing the land. And it also just covers contents only policies like we talked about. And then the general property form it has a maximum building coverage of $500,000 for building and contents. It also has that increased cost of compliance dollar amount in there. And the policy is pretty much the same as our, oh, crap. Okay, sorry, guys. Why did it do that? Hello? Can you guys hear me?
Yes.
That is really weird. I don't know why. Are you seeing my browser right now?
Yep.
Yeah. Why did it do that? I didn't touch anything. Here, let me. I'm gonna
your presentation, Erin. Now,
yeah. Yeah. Okay.
Yeah,
let me share again.
that's
So
what
I
could
lost
see
viewing my screen completely. Stupid computer. I've been having all sorts of weird problems. I'm telling you, with this computer. I keep wondering if something, there we go. Okay, now we're back. All right. So we're going to skip over the residential condo building association policy and talk a little bit about what's the definition of a flood. This is the full definition, but I'll go over just kind of the most important piece, which is it covers 2 acres or 2 properties. Those acres, if we're talking about a rural community, do need to be continuous, and it needs to be normally dry land that floods. and touches your property. So it's water that travels over land and touches your property. Okay. So that could be from a number of sources. It could be, a rain event. It could be a runoff event, with snow melt, something like that. But it's a rapid and unusual accumulation of that runoff surface water. It could be mud flow. Generally, when you think about mud flow, you want to think about it as being looking like chocolate milk. We don't cover mudslides. So if it's crumbling, not covered, I don't think that's anything that Miles City would need to be worrying about, but you never know. I don't know the lay of the land there as well as I should. And so I think that's important to understand what that definition of a flood is. So the one thing that I like to tell people it doesn't cover is seepage. So if the ground is just inundated and water starts coming up through the drains in the basement, for example, that would be considered seepage. And that's not something we cover unless there's a general condition of flooding in the area. And that is something that the claims adjuster will determine at claim time. Okay, so I'm going to go on to the next slide and talk a little bit about some of the things that we cover. So we'll cover the building, and I've got a slide later that really goes into detail on some of this. We'll cover personal property. Personal property is depreciated, much like your car is depreciated over time. So, if you have a 20-year-old refrigerator versus your neighbor who has a brand new refrigerator, they're going to get a bigger payout on that fridge with the new fridge and versus you who has a 20-year-old refrigerator. So those things can be depreciated. Other things that we cover are debris removal on the property. Will actually pay for you for like an hourly wage for you and your family to do cleanup after flooding. We'll also pay for loss avoidance measures, which means sandbagging, plastic sheeting. Will now cover a one-time fee. Will cover those inflatable dams that you can buy that protect your property, but it's only one time, and it does have a limit as to how much we'll pay on that. I'm not going to go into the condos. We talked about the increased cost of compliance. Let's go to the next slide here. So this is a great just overview slide. This is kind of, and we have documents out there that I'm sure Samantha has access to that go into greater detail, but these are some of the things that I like to mention. The building and foundation are covered. Electrical and plumbing can be covered. Electrical and plumbing, they really have to prove that it's damaged. So that one, sometimes I've seen at claim time, they will come back and say, nah, we're not going to cover that. Everything's running. But if it has been underwater, let's say that you've got your control panel for your electrical in the basement and it was underwater, that's something that they would consider replacing. Furnaces, water heaters, a detached garage. But here's the key to the detached garage. It's only going to cover 10% of the total amount of your policy. So if you have a $250,000 policy, it's only going to cover $25,000 for that garage, attached or detached. It's that's the maximum that you're gonna get. And if you have contents coverage, it'll be the contents in the garage as well. I mentioned debris removal. If you have contents coverage, it'll cover clothing, furniture, electronic equipment. The things that can be excluded. Avoidable moisture, mold, and mildew. What does that mean? So we don't cover for mold unless, and I have had instances where this was the case up in North Dakota. The city issued a warning and said, you cannot go back into your property. It's not safe. And so when a community issues that warning, you can submit that, and then the NFIP will assist. But generally speaking, our mold cleanup is as if we were cleaning up water. So it's just something to keep aware of. So if you wait too long to get in there and take care of it, and now you've got a mold problem, that's something that was avoidable as long as you could get in safely. Some things that are excluded are currency, precious metals, valuable papers. The other thing I like to mention is antiques. And furs and things like that, jewelry. Those are all, we've got a cap on our policy. So That's something that you want to keep in mind. If you have really, really valuable antiques, we're going to replace those, let's say you have an antique table that's worth, $20,000. We're going to replace it with the functional cost of a new table today, not the antique value of it. So property and belongings outside of the building, not covered. It's the building and the contents within it. Landscaping, not covered. We don't cover temporary and additional living expenses. And this is where, in some cases, if disaster assistance is available, that comes through disaster assistance is the additional living expenses. The other thing that is kind of a misnomer on this list, but I like to list it because you wouldn't believe how many calls I've gotten over the years with people arguing with me that they think their deck should be covered. But our decks, we will allow the replacement of a deck for egress only. So in other words, access is access into the home. But if you have a big wraparound deck that's 45 feet long all the way around the house, we do not pay for that. So it's just egress into the home. And I think it's either like about 6 feet or 8 feet. I can never remember the exact amount. I think it might be 8, but don't quote me. So let's talk a little bit about the new rating methodology, because it's kind of exciting. It's gotten simpler for agents, so it's a lot easier for them to write flood insurance. They've got a rating tool that figures a lot of this out for them, and a lot of the data that the agents had to put in before, they don't have to. The system does it for them, which is great. So as you can see here on the left is how some of the big rating factors that we used to rate for a policy. On the right, you can see we've got a lot more rating factors that we consider. So in the past, an A zone in a coastal community and an A zone in Montana got the same rate. Well, now you can see down there, we have broader range of flood frequencies. We now use, the source of the water. So we've taken into consideration the stream channel rating, the water source rating for that risk. And so that has made, in most cases in our states, the 6 states that we cover, the rates either went down or stayed the same for over 50% of our policyholders. So that's pretty great. Not true in the coastal communities, unfortunately for them, but good for us. So we now use additional sources. We don't just use our flood insurance rate map. So we look at additional sources and flood risk data that's available. Some of that is federally sourced, such as the Corps of Engineers. And then also we go out that are available. And this is a very common practice. When we redid the program, we were really trying to shadow what the private flood market was doing, and worked very closely with them to develop this product so that we were modernizing the way we rate policies. We were really behind the times. We look at the probably the biggest factor is the distance from the water source. So is that a coast? Is that an ocean? Is it a river, a stream, a culvert? And how far away is it? So, 2 neighbors can now, and that's whether you're in a high-risk flood zone or a low-risk flood zone. Everybody is rated based on their distance. And then the type of flooding that it is, whether it's fluvial or pluvial. We look at the ground elevation of that property. So in the past, we used to rate the property based on the base flood elevation of the area, which is how high we estimate the flood waters will rise to in a large event. And those are marked on our flood insurance rate map against the lowest floor, which was, the basement, crawl space, whatever. And now we rate against the first floor height above ground and compare it to the lowest adjacent grade of that ground elevation. So, and then we look at the construction type. And so, sometimes I'll get calls from people and say, well, my neighbor, their rate is X amount, XYZ lower than mine. Well, they maybe have an elevated structure, and the home that they're calling me about is a slab on grade home. The one thing that Diana always points out, so I will as well, is single story slab on grade homes kind of get screwed with some of our mitigation discounts. There's just no other nice way to put it. Everything now for the mitigation discount, we used to kind of offer sort of shades of discount for, elevating things out of a crawl space or a basement. Now everything has to be out of that crawl space. And so let's say you have a first floor structure and it needs to be the first floor above ground. That would mean in many cases they'd have to put their all of their stuff in the attic to get that mitigation discount. And we have tried to say that's not fair, and they have not listened to us in the region. So it hasn't been changed yet. But at any rate, this kind of gives you an idea of what the new tool is doing. This looks a little bit more at some of the data sets that have been taken into consideration for different parts of the country, and some of the tools that we're using. So if anybody's got any questions on these data sets, I would say I am not the expert on this. I'm hoping somebody else on the call is, because I'm not. I can talk about some of them, but not all of them. So these are some of the things. This was something that changed last year, but I like to bring it up. And then there's a new mitigation discount that's kind of exciting for communities that I like to mention. We changed with this new methodology that we're using for rating to for properties that maybe had more than one claim. In the past, we used to follow that. It used to follow that property for 20 years. Now it's only a 10-year period, and that claim period starts as of April 1, 2023. So any of those old claims that are in the system will not be considered in the new loss rating properties. So that's good news for a lot of people. That helps them. It will, there's a lot of data there that you can look into if you'd like to. If you want to look into more information, that link right there it's called an NFIP WIO bulletin, and that bulletin number is what you'd want to put in the search, but you can find it just by doing NFIP WIO bulletins, and all of them will pop up for and you need to click on the year. Then the other thing that showed up this year, and I don't have a lot of detail on this yet. I just sent something off to my underwriting team on within my, but community mitigation projects may now offer discounts to policyholders. Project documentation must be submitted, I'm assuming, to underwriting, and a email from the local community kind of describing the project. I don't know how much of a discount this is. I don't know exactly what, these are stormwater management projects that could be, that are being done that might be helping homeowners. So, hopefully I'll get some more information on this, but I like to make the local communities aware. We were in North Dakota 2 weeks ago doing some agent training, and both the state of North Dakota and the city of Bismarck jumped all over this and wanted more information. So hopefully we'll have some more info, but I think it's kind of exciting. People have been asking me this question for 15 years. The community just finished a project, and is that going to help my rate? And it was only if they did a letter of map amendment, so that it might have helped them. But this is kind of cool that they're offering this, but they don't give a whole lot of information in the manual. So this is a section I may scoot over a little bit because Tracy covered this pretty well, but I like to talk about some of the statistics that are kind of shocking to me. Is our annual claims now are 30 to 40% of our claims are coming from outside of those high-risk flood zones that we talked about. When I started with the program 15 years ago, that number was 15 to 20% of our claims were outside of high-risk flood zone. Now it's 35 to 40%. So things are changing. Floods are the #1 natural disaster worldwide for loss of life and property. It's hard for people to understand that, but it is. And that's one of the reasons why the federal program came into place, was to try and figure out how to regulate for flood risk. And I think they've done a pretty good job on the floodplain management side to do that. What that last bullet is, is always disappointing to me is that in any community, generally speaking, we've only got 8% of the community that's actually insured for flood risk in high risk flood zones, and less than 1% in low risk flood zones, which is just a big fat bummer. I think the only event I've been to where I went out for a disaster in Houston, they actually had 15% penetration, which is of policy count, which is great, but it's still way too low. It just makes it so much harder for a community to be able to recover when they don't have flood insurance to help them. So these are just kind of some misnomers that people, think is that you don't have to be in a special flood hazard area to get flood insurance. And a lot of people think that, including agents occasionally that I talk to. And then the flood insurance rate maps do not reflect the increased seasonal risk of flooding. So the best way I can say that is Mother Nature likes to put her water wherever the heck she wants, and we can map and map and map and use all of our tools. And we get, like, Colorado had 36 inches of rain in 3 days. That was just, I felt like Noah's Ark was coming. Sitting in my house, I had to bail out my crawl space, honestly. And then anyone who's anyone who's in a participating community can purchase flood insurance through the NFIP. This is really important. If you're ever not happy with the rate you're getting through the FEMA's flood insurance program, the private market is very strong. And even for communities that aren't participating, oftentimes the private market can help. If you want to shop around, I highly recommend you do so. And there's some great, so that you understand what the policy covers and what it doesn't. Because there are some great private policies and then some other ones that may have a narrower definition of a flood that I don't like, or may not cover some things we do. Some of them cover contents in a basement. They cover more than we do in a basement in the private market. So sometimes, depending on the building structure, there's some things I like about the private market. So so what are some flood causes in our area? Well, obviously heavy precipitation. We can have dam and levee failures. We've seen a number of those across the country in the last, 5 or 10 years. And then we can also have storm drains that just back up, clog, or fail, and send water in directions that our flood maps can't necessarily fully anticipate. So I think it's important to keep in mind that, it's hard to know when that flood risk is going to hit, but it's important to be protected for it. These are just some misconceptions I like people to be aware of. They oftentimes think that their homeowner's policy covers flood, and in most cases it doesn't. The one exception is a lot of mobile home insurance policies do cover flood, but you need to double check. Most of the time, the mobile homes that I've helped out with a claim, they've had that insurance through their lender, and the lender included flood. But I have seen a few people where their mobile home policy didn't cover it too. So people say, oh, I live in a 100-year floodplain. Or the one that really kills me is that they had a flood last year, so they think it'll never happen for another 100 years. And statistically, that's just not how it works. So, we say there's a 26% chance of flooding for properties that are located in an SFHA. Tracy listed that earlier. I really like to say 1 in 4 homes who are in, you have a 1 in 4 chance in in a high risk flood zone to have a flood claim over the lifetime of a 30-year mortgage. And 1 in 4 sounds a lot higher risk than 26%. So that's why I like to say it that way. So people think because they're out of a high risk flood zone that they're safe. That's not necessarily true. Like I said, that 40% claim rate has gone up. And I would say, in our states, the thing that raises our risk that the maps don't reflect is flood after fire. So if we have a burn scar area, people who are downstream of that burn scar are at higher risk generally for about 10 years. The first 3 years are usually the highest risk, but that does not mean that it won't, you know, that they won't have a big loss in that 10th year that you know, that the Mother Nature just hasn't recovered from yet, and it causes flooding in areas you wouldn't expect. And I have seen that in the 15 years I've been doing this job. In the 10th year, a community just gets hammered. And they get hit harder than the other communities around it because they were right below a burn scar. People say flood insurance isn't for sale in my area. It is always available in a participating community from lots of big insurance companies. You know, any of the captive insurance companies like State Farm, Allstate, American Family. I can't think of any other big ones off the top of my head. And any renter or owner can purchase as well. And I would say in those non-participating communities, you'll need to look to the private market. If anybody has questions about finding somebody in the private market, I'm more than happy to try and help them and refer them to a couple agents in their area who can give them some quotes. And then, you know, this is the one I think most people rely on is, oh, if I get hit by a flood, disaster assistance will bail me out. Well, we're going to talk a little bit more about that because federal disaster assistance does not come along to the individual homeowner or property owner for every disaster. The local community might get money. The state might get money to help rebuild infrastructure, but not necessarily will the individual qualify. So let's talk about, you know, what that grant might look like. Here's the average grant disaster dollar amount that's a payout is $5,000. The average claim is $68,000. And in most cases, what's going to help you recover is a small business loan. And guess and that's through the Small Business Administration that comes out and works in the disaster centers. And you can register online. But in most cases, or in a lot of cases, if you get a Small Business Administration loan to recover, you may be required to carry flood insurance in perpetuity on that property. So the future owner is required to carry flood insurance because you took a loan out to recover 15 years ago. So it follows the property, not the person who took out the loan. So I just like to point out those statistics. Here's some other factors that kind of, I think, are sobering for people. They don't really know. They just assume they can rely on it. It does require a presidentially declared disaster. For flood insurance, you don't need that. And most flood events do not receive that major disaster declaration. I've already mentioned that most of the recovery tools that we put into place is in the form of a loan through the Small Business Administration. And the maximum outlay that you're ever going to get from the NFI or from disaster assistance is $37,000 for housing assistance and $37,900 for other needs assistance. So that individual assistance is not necessarily does not necessarily make you whole after a disaster. So that's why that flood insurance is so important. These are some of the benefits of flood insurance. It doesn't depend on that declaration. There's no payback requirement, like as it would be in a loan. The NFIP will not cancel you for repetitive losses. Your rate might change, but we're not going to cancel you. Some private policies will, and some private policies will just cancel in a certain area when they realize they've got too many flood policies in a certain zip code, for example. So that is the one downside to private flood insurance. We have limits to our policy, a maximum of $250,000 in the private market. You can get higher coverages. I like to point that out. And you can also get an excess policy on top of our NFIP policy. So you could insure with us for the first $250,000 and have an excess policy if your property is higher, if your replacement cost value is higher than $250,000. Same for businesses. You can get an excess policy over the $500,000. The lender is never going to require a policy over those amounts of $250,000 or $500,000. I've never seen them do it. So I suppose they could, they're allowed, but I've never seen them do it. So now we're going to move into, just recovery stuff. I've got a couple slides here. So this financial toolkit, if you've never downloaded it, it's good to have on hand. It's good to put in a plan in place, right? Samantha, I know you've talked about this in past annual meetings that you do, the importance of putting in a plan in place with your family and what things you need to safeguard and think about before an event has flood or otherwise any type of event. So, in your Go kit, you want to have key records, contact information. The smartest thing I ever heard at a meeting is how many of us have ever downloaded all the contacts in our phone. So we have a printed contact list of our immediate family or the people we want to stay in touch with during a disaster. I know I've heard it and I still haven't downloaded my phone list, my contacts list. But that's important because in a disaster, are you going to have a charger? Are you going to be able to get to a store? Are you going to have the money to buy a charger if you had to rush out of your home quickly? So some of those things are really important. Your social security cards, passports, driver's licenses, medical history, any of your insurance information is important to have on hand that you can take in a tub like you see in the display here. Any documentation, phone numbers, anything that you think is important to recover after the disaster, along with they say 3 days of supplies, medicine for your pets as well. If your dogs or cats are on medicine. Insurance records are important to have on hand, life insurance, a detailed list. This is something that you can do in advance. And there's a lot of great apps out there that you can download from your insurance companies that will help you keep a good list of your valuables in the home prior to the disaster. So it's important to take pictures of each of the rooms in advance. I do have that. I've done that with my home. And then keep documents of photos in a fireproof, waterproof safe. You can actually buy just some zippered pouches that are waterproof that are good to have. And then, annually review the amounts of coverage that you have and the deductibles that you have and the valuation of your property. I recently added an umbrella to my policy because I'm now on the board for my HOA and I wanted to be protected in case anybody decided to sue the board. Our board carries insurance, but I thought it was important for me to have additional. So these are the kind of things that you want to think about for the natural disasters that can happen in your area. And then flood preparation, what things you can do if you know flooding is imminent. Move your personal belongings to higher floors. Take pictures of them before you do that, so you show where they were before the disaster happened, and elevate other items as much as you can. Renting a moving truck, temporary storage units are covered. It's very limited. I think it's 45 days that we pay for a storage unit, and it has to be an imminent threat of flooding. If you do that and then it doesn't flood to get paid, so you might have to prove it after the fact. And we talked about the sandbagging and those protective measures. We're almost at the end here. Have more questions if we didn't cover anything here. There's some great things that you can download and print off if you want to share it with family members or neighbors. I always think with these community meetings, when we do them online, I worry most about the elderly folks who maybe aren't as tech savvy. So if you listen to this later off of the Miles City website, download some of this information and share it with your neighbors around you, especially your elderly folks, and make them aware of what you learned and what you thought was valuable from today for the last 2 days sessions. These are also, if you want some more information, boy, these are all the links that you can go to. I particularly like this discount explanation guide that you can go to. So if you just go to FEMA.gov and type in discount exclamation guide, it'll find it. You can also just type in equity in action, FEMA equity in action. And a lot of this you'll find from that main page there. So you can see the link across the top, the NFI, the FEMA.gov NFIP transformation website is where you would want to go to. And then, so now I want to talk a little bit about what's coming down the pipeline in the next couple of years. Hopefully, we've been told the direct-to-consumer purchase website is coming in 2025, where building owners can buy their NFIP flood insurance directly from this online application. We did a study, and a lot of the younger folks wanted an app where they could buy directly. So we listened, and we've been in development of that for a couple of years. So that'll be a great resource. And Samantha, if you have questions about how much, a rate is going to be, you can now go directly there and do a quick quote to find out. I know a lot of times local officials want to know, well, how much is it going to cost for flood insurance for this type of home? And then the policy forms, where it gives you detailed information on what's covered in our policy and what isn't, is listed. We've also got, and this is the really cool part that I wanted to go over. Sorry, I lost my train of thought here for a second. We're going to have, hopefully next year, we don't have a date as to when this will be put out, but there's a new homeowners policy form. You can read it. It's great bedtime reading if you need to drop off to sleep. But for those of you who are really curious as to what's coming, it's pretty exciting. They're trying to match more of what the private industry does with the policy form. And Diana did not want me to go into details or do a deeper dive on this, since we don't have any official marketing materials on that yet, but you can read up on it. And I will tell you, there are some things that I think are going to make our policy and our coverage a whole heck of a lot better. And I like, and I think that's really exciting. It is out for public comment right now. That's why it's out on the Federal Register. So if you do look this over and you say, I don't like this, or I think they should do this, you can actually put public comment in there. They'll have instructions for how to do that at that Federal Register. And just keep in mind that it simplifies a lot of things. We're again trying to shadow more of what the private industry does with their policy forms. So this is the first one that's coming out, the homeowners flood insurance form. And we don't have that formal release date yet. I'm crossing my fingers that this comes out in 2025, but this public process does take time. So we'll see how long it'll be. I'm hoping 2025. So with that, I will turn it back over to you guys. Are there any questions?
A lot of information.
Last slide. Excuse me?
There's a lot of information. I think everyone's kind of processing. Does anyone have any questions?
I'm sure. I know, and I tried to move fast because I know it's kind of late. I'm the last one, so but I think some good changes have happened in terms of simplifying things and making it easier for agents to write a quote. I know a lot of agents have really commented and said it's so much nicer, makes it much easier for them. And I think this new policy form is really, really exciting. So for local officials and for Tracy, if you haven't read it yet, I highly recommend you do, because there's some cool stuff in there.
Yeah, thank you, Erin. Appreciate that.
Yeah.
All right. I think everyone's good here, Erin. I appreciate you taking the time to call in. And this will be on, when I get it downloaded, it will be on the YouTube page. So if you want to watch it again, sure can.
Oh, shoot. And I'm going to put Diana's information in the chat. So if anybody wants to get a hold of her, they can. I'll put that here now. And that's it. Got to look up her number. I don't have it memorized.
And if anyone needs it, you can always contact me. I also have Diana's information.
Okay. I don't know if you have her new number either.
I might not.
Yeah. There you go.
Thank you, ma'am.
Mm-hmm.
And think, well, I guess you and
Hey,
Tracy.
Sam,
Yes,
just a quick thing. Because you're gonna record this, you might want to just say that new number out loud. Because
yeah.
people won't see it in the chat. They won't see any of the comments in the chat.
Thank you, good point. So Diana's number with BEMA or flood insurance is 720-480-8338. Thank you, everybody.